Hi everybody, this is Osprey Eye from mychartcoach.com, and in this video we're going to take a look at the small caps that were in play today. There's been big runners for the small caps every single day for the last couple of weeks, and they've been pushing them higher. And so first up, we're going to take a look here at SNES. All right, as you can see, it closed up 296% on the day. It did push much higher, and after hours trading, you can see it got up to 154. It was hitting a key resistance level intraday. People were locking in some gains. That's always a smart thing to do when you're up 300% of the day. Never hurts to lock in some gains, but it's also nice to leave some skin on the table, so if it breaks out higher, you still have, you can still take advantage of that gap up potentially open. As you can see here at 154, it's pushing it now well above the upper Bollinger Band and the 200-day simple moving average. As you can see here on the daily chart, it closed up here with 85 on RSI, 95 on Fasto. It's pushing super hard. Check out that big flagpole. So it's formed this huge white candle. It had got above the middle Bollinger Band and the 50 and 100-day simple moving averages down here, the golden green lines, and then it closed above the 200-day simple moving average at 122. That close above that level was signaling more upside potential. It had been struggling to break that level the entire day until the close, and it finally pushed above. Notice it did close well above that upper Bollinger Band. So the first support levels, if it were to drop below the 200-day simple moving average, would be way down here at EMA 4 at 70 cents. Now, if you could take a look here at this is the SNES chart that I posted in our chat today in the premium channel. So please come check that out if you want more in-depth analysis in real time. And so we identified the gap that was back here in November. This is the top of the gap, the bottom of this candle. The top of this candle is the bottom of the gap. And so we were looking for a break through the bottom of the gap resistance level today when it was hitting that zone after it got above the 1500-day simple moving averages. It was able to bust through. And then we were looking at this 200-day simple moving average as the big level to break. It was struggling to get above that level, but it finally did into the close. Now right now it's at 154. So that's putting the share price way up here around where this red line is, in the zone. And so that's putting it above this top of the gap level. That also, if you get a gap up open, that is going to create a space on the chart. And so if that does happen, they will pull it back at some point to fill that gap more than likely. Just keep that in mind if you are chasing. All right, so it's going to be all about staying above the top of the gap and staying above that 200-day simple moving average tomorrow. If you see the share price drop below both levels, that's going to be a red flag and the signal to lock in gains. To the upside, if it can bust through this 160 zone, you can see there was support back here. You had this key support level that it stopped at in after hours trading, and so it's going to have to bust through this level, and then the ultimate target, if it was pushing and it was going nuts, would be the 300-day simple moving average at 296. You can see that's lined up with the high from October and November. That's where it topped out last time. It's lined up perfectly with the 300-day simple moving average. So I mean, you never know how high they're going to push it, and so the key, in our opinion, or my opinion, is to follow the intraday charts, and the 15-minute chart is the one that I like to use. As you can see here, when it got above that 300 simple moving average today at the open on the volume spike, notice the average daily volume super low. That was your signal was in play. It started the day with super tight Bollinger Bands, and it was below all the moving averages. So then when it busted above the top one, that was a signal to ride. And so in the chat, I kept putting out alerts saying as long as EMA 4 holds, the signal's to keep riding. It was holding the entire day, and then when it hit this candle right here, alerts were put out that it was hitting that 200-day simple moving average resistance zone. A good idea to lock in some gains at this level. It can push higher and keep going, but bulls and bears make money and pigs get slaughtered. So when you're up 200 or 300% on the day, it's always smart to lock in some of those gains. You never know what's going to happen. It traded sideways here in a sideways channel. It did get below EMA 4, and it was flirting with that level all the way into the last hour of the trading day. Notice the EMA 13 support held. That's the orange line. And then when it got back above here at 315, that was your signal. Oh wow, they're really taking this thing back higher, because you could see the big volume came back in. There was a declining volume pattern, and then the volume volume spike. And then when it busted above the upper Bollinger, or above high close horizontal resistance, this closing price at 1 o'clock was the high close of the day. When you get a close above that level, that's signaling more upside potential. So the last two candles of the day closing above the EMA4, above the middle Bollinger Band, above high close resistance on huge volume. Notice it was the biggest volume of the entire day on the 340, on that 330 candle and 330 volume bar. And so it was all signaling that this had more upside potential. And so that's always great to see. Now it's going to be all about pushing higher and seeing if it can push above that 160 resistance zone. All right, let's look at ADOM. This was a stock that was alerted last week, and it had really nice follow through today. So congrats everybody. Closed up 52%. RSI at 83, Fasto at 81. Last week, so it was one of our plays in the chat because it got above this middle Bollinger Band at 71, and then it got above that 50-day simple moving average. We were looking for a close above that last week, and that happened. It closed at above 93, so that was signaling more upside potential. And then today there was a big gap up open. I mean, a huge gap up open. The open's way up here, and so there is a space on the chart between high of day on Friday and low of day today. So if this 100-day simple moving average, the gold line at 151, fails to hold, that gap below could fill. Today's candle is floating well above the upper Bollinger Band. EMA4 down here at 117 is the first support level. It needs to bust through this January resistance. You can see it was hitting this level before it pulled back again. And so if it can get above 2 and then break above this level right here, around 220 or so, 215, then it could keep pushing higher. Right now, it's all about staying above that 100-day simple moving average at 151. If that level holds and turns into support, it should signal more upside potential. There was huge volume today. I mean, this was probably one of the largest volume days, if not the largest volume day in the history of the stock. And so, it's a huge push. I mean, you could see the volume here. It really got going on Friday, and then it followed through today. They did fade the rally once it got up here above 195, and you could see it had this downward channel happening, but it broke above into the close, and it did close back above that middle Bollinger Band. So you want to see it stay above 167. If it's above 167 tomorrow, that should signal upside potential, and then you're looking for it to work back up to 190. Just above 190, about 191 is the big level to close above. If you see a close on the 15-minute chart above 191, that should signal more upside potential. Down here, you want to see that low close from today hold, and so that's around 154. If it drops below 154, the downside risk is it comes down here and tests that 50 simple moving average at 132. Okay, let's look at ENT. This is another stock that we were all over last week, and it just keeps following through. Closed up another 35% today. This is an entertainment stock. Okay, so we put out alerts on the day that sports betting from Supreme Court law making it legal for states to decide whether or not they want to have sports gambling. And so what we did is we went through all the different casino stocks, and it was kind of like at the very end of the hunt, I came across ENT, and it was like way down here, trading. I think the first day we got it was down here like around $1, and that was like the news came out, and as you can see, it's just been heading higher ever since that news came out on the sports gambling. I don't know much about the company, but it turned into a really good trade here. It just keeps pushing higher. It got above that 50-day simple moving average, the green line on Friday. That closed above 129 was really bullish. The last time it had closed above that level was way back here in January when it ran up to the 200-day simple moving average. Today, the big level to break was the 100-day simple moving average at 164 and this 160 resistance zone. Look at March, how many times it hit this 160 level and failed to break above. I mean, all those candles couldn't break above, and today it finally did. That's a big sign that this could push higher. Now, if it does dip back, because it is on a 4-day run, you want to see that 100-day simple moving average hold. If it were to drop below, then the candles could work back in the bands, and you could see EMA4 at 143 tested. That's the downside risk if that 100-day simple moving average fails to hold. If it gets above 190, the obvious target is right here at the 200-day simple moving average at 220. You can see that's a prior resistance zone, and it should be able to eventually make it to that level if that 100-day simple moving average turns into support. Notice the increasing volume pattern. pattern. So this is like, it has volume increasing as it's pushing higher. It now has RSI at 71 and FASTO at 90. So it remains to be seen if it can stay in the overbought power zone in both indicators. As you could see in the past, it has a tough time doing that. It's not one of those stocks that has a history of being able to push above, but this is an epic run for the stock, and we'll see if it can keep pushing higher. If you look at the 15-minute chart, you can see where it really heated up on the 17th, getting about, it started going on the 16th here when it got back above the middle Bollinger Band, and it got above the green line, the 50 simple moving average. And then on the 17th, when it got above the 300 simple moving average, that was the top moving average on this chart, the blue line. And notice how the party just really got going ever since that date. And so the key is you look for the patterns, and then you can see down here for ADOM, it got above the moving averages, and that signal that was happening. Same thing for SNES. When I showed you here on the first candle, the party started happening, and so we look for the patterns. I could care less what the ticker symbol is. I'm just all about the pattern. I mean, if you're trading technically, it doesn't really matter. It's just all about the best chart setups. And so when you see the breakout like this above the moving averages on the 15-minute chart on volume, that's your signal. Okay, yeah, the stock's in play, and then the signal is to keep riding as long as support's holding. You can see, you might have got shook out on the middle Bollinger Band break, but it managed to get back above each time, and it's holding the 50 simple moving average, the green line, and so right now here it is. It's channeling out. Okay, so now this is at a point where it could take a breather. If it fails to get above this 186, 187 resistance zone, that high close there at 115 to the downside, it has to stay above this 170 to 175 zone. If it were to break below, then you could see that 50 simple moving average at 153 tested. So it did stay sideways here. It's got to bust above resistance and hold support to head higher. Okay, let's look at AMMA. Another nice one. Closed up 65% today. Congrats. Good job in the chat today. I think, yeah. I mean, everybody, we've got a good group. I know we don't have the biggest chat out there, but it's all about quality. We have great people in there. Everybody's sharing information and trying to help each other succeed. And as you can see here, this stock busted above that 50 simple moving average today at 45, and that signaled that it was really heating up. It had been struggling with the middle Bollinger Band down here at 38. You could see there was a close above the beginning of May, but it failed to hold. Last time it got up, 2 times that it got above the middle Bollinger Band, it failed to hold. This time it was able to bust above and actually close above that 50-day simple moving average for the first time since back here in January. So this is, the best the stock has looked since January. Now it's all about that 100-day simple moving average at 62. If it can bust above that level, then you're looking at a possible test of this 100-day simple moving average up here. So you got some key levels above. It's going to have to get above high close resistance right here. You notice how that's lining up. You've got this zone right here. Well, you've got to bust through here, this 65 to 70 resistance zone, and then what you have is a gap. You have a gap between high of day on this candle and low of day on this candle, and the bottom of the gap is always a big resistance level to break. Notice how all these candles are hitting the bottom of the gap and failing to break that level. Why is that? Why did the share price run right to the bottom of the gap, and that was the sell zone? Because the bottom of the gap is always the take profit zone if resistance fails to break. So take note. If you learn one thing from the video, that'll be one that will make you money in the future, because if you locked in gains at 90 here, knowing that there was a gap on the chart, you were able to reload lower if you so desire. So it's all about, you have to go back on the chart to find where key resistance levels are when stocks are running. Okay, so if you look at AMMA here, on the 15-minute chart, you can see it had that parabolic run, and then this is what we call the climax spike, when you have the big volume above the upper Bollinger Band, big push, and then followed by the red candle. That was the intraday climax spike. This was the signal to lock in some gains. You would have known that this was that it was hitting resistance if you had the information about the gap. So that's what I try to provide in the premium channel and on the Osprey chat that I repost my plays on, is I'm trying to provide the technical analysis to help give you the leg up on the competition, because everybody's competing with each other on the entry and exit points. And by spending $15 to $20 a month on my premium channel, you can have these stock plays with support and resistance levels given to you spoon-fed on a daily basis. As you can see here, it's pulled back. It's hitting EMA 13 at 59. If that level fails to hold, then you're looking at a drop down to 51. Right now, they have the algorithm set up to sell at the EMA4. Notice how the candles are writing EMA4 resistance. If it breaks above 64 tomorrow, that's going to be your signal, okay, they're taking AMA higher. And then it has to get above 74 and 88. Those are the two big resistance levels above. If it breaks above 64. If you see it drop below 59, that's when you're going to know they're taking it lower and be shooting for either 51, or if 51 breaks, it could drop to 43. That's the downside risk. It has to hold that middle Bollinger Band at 51. It still has a good uptrend going on the 15-minute chart, and it has a good uptrend going on the daily chart. It just has to follow through. That upper wick on today's candle does show some profit taking, and so what that shows is that you know, that there's possibly some dilution. Okay, so they're possibly we're selling some shares. So if you want to know whether or not a stock was dumping on a run, one thing to look at is the upper wick on the candle. Is there a long upper wick? That happens when it hits a resistance zone and they pull it back. And then also look at accumulation distribution and shaken money flow. You can see accumulation distribution tick down. You know, the histogram is getting smaller, but there wasn't a green spike. Look at that huge volume spike. You know, so there should have been a bigger spike with this big 65% gain on both of those indicators. So it's just a clue that they were, you know, that's what penny stocks do, is they sell shares into runs. But you never know how high they're going to push it, like SNES. And SNES did have good news today, so it is running on news. Okay, let's look at ANY. Closed up 32% today. So yeah, this one is heating up. Notice how RSI is just down here at 43. If it can get above 50, that'll signal that the chart's heating up. It's been struggling with that 50 level, so it would really be a bullish signal. Check out Fasto. This is the highest level it's been in months. Okay, now you have a pinched plus DI here with minus DI. If the green line crosses over the red line, that'll be the first time there's been a bullish crossover in months. You have to go off this chart. That would be a signal the bulls are taking control. The reason why I'm showing you this chart and why it was alerted in our chat today in real time, and everybody had a chance to enter before the close if they so desired. That's the key about being in the chat, is you get because some people are like, why are you showing all these charts that are, you know, the information's already happened. Well, it hasn't already happened for us because these plays have all been alerted already in our chat. Some at the open today. So our members have had a chance to trade these all through the trading day. So that's the key. It's all about getting in early. So everybody that's saving the 15 or 20 bucks and is watching this video, you missed out on the early entry point and exit points on all these plays because they were already discussed in the chat today. So that's just, you know, just giving you a heads up. And then you know, everything, it's all about timing, right? And so don't want to be pound wise and penny foolish. And so if you look here at the middle Bollinger Band, that close above the middle Bollinger Band at 44 was the big signal that the stock was heating up. All right, it hadn't closed above the middle Bollinger Band in months. You have to go way back here in March since the last time it closed above the middle Bollinger Band. Look at the PSAR. There was a flip here, but the green dots did flip below the candles. Look down here. So you have a PSAR bull flip. You know, you've got MACD is heating up. You've got the big volume spike. Look at that volume spike. That's what you want to see when a stock is breaking resistance. That's usually a good sign that it wants to push higher. And so what we're looking for now is it has to break above this high close level. I guess really it would be this doji here at 49, the high of day. And if it can get above that, what we want to see is a run through this upper Bollinger Band at 54 and then up to the bottom of the gap. The bottom of the gap is around 65, and so that's going to be a tough level to break. You remember what I just said about the you know, the other stock that ran up and hit that upper Bollinger, or hit the bottom of the gap level? If it comes up and hits the bottom of the gap and it fails to break, that's the lock-in gain zone. It always is. And so, but if it breaks above, what could happen is you could get a gap fill. The gaps between high of day in this candle and low of day in this candle. So a run up to the 50-day simple moving average at 91 would fill the gap. So just keep an eye on it. If it drops below 44 and closes below that middle Bollinger Band at 44, it will no longer be in play. This is a very, very risky stock to hold if candles are forming below the middle Bollinger Band. The only reason why it's even in the video today is that it closed above resistance, and there's a possibility of a new uptrend starting. Okay, let's look at CHK here. All right, so this is a higher quality stock than some of the other ones that we've been focusing on, just because you know, the energy sector is super rocking right now, and CHK has really good volume. I mean, look at that volume, 96 million shares traded at $4.60 a share. That's some serious money flow, right? And so you have RSI and Fasto are super pushing here. This is on an epic run. Okay, it pushed really hard here from down here below the middle Bollinger Band, and then it got above the 50-day simple moving average, above the 100-day simple moving average, above the 200-day simple moving average, and then last week it got above the 300-day simple moving average, the blue line, on Thursday, but on Friday it closed back below. But notice the close on Friday was above the pink line. Right, so every single one of these candles in the straight perpendicular, starting to look like an Eiffel Tower type of run, have closed above EMA4. So our theory, and not just ours, but this is a strategy that a lot of people that trade stocks are using, is you keep riding as long as EMA4 support is riding. Okay, so that's just the signal, is that the chart's intact. There's no reason to sell unless you're locking in gains and trying to play it safe. But even though that was a nasty reversal pattern here on Friday, and it did form, it looks like a bearish dark cloud cover with that candle, and it did fail to close above the 300-day simple moving average. There was no shame in locking in gains on Friday. It looked like it could pull back. The one clue that was signaling it's still holding on is the fact that it stayed above EMA4. If it closed below EMA4 on Friday, what the downside risk is, and it didn't fill it, there's a gap between Wednesday and Thursday's candle from last week. So it dropped down to EMA 8 at 395 would fill the gap. Today it pushed higher. Now it's just all about staying above this 300-day simple moving average. As far as the daily chart goes, it has to stay above that level. If it dropped below, that would signal downside risk. You wanted to see it stay above 430 zone right now. That was the high close from back here in January, and it was the level that it topped out at last week before it broke out this week. So this is a huge move today. So what do we do when a stock is breaking out on the daily chart? We look out at a longer time frame in order to find the next resistance level. And so what I'm using here is a weekly chart. So each candle on this chart represents one whole week of trading. And so as you can see, this is on a 4-week run. Now today's Monday, so all the action from today we can see in this one candle. But this candle will change throughout the week, and it will not set until the closing bell on Friday. The big thing about this chart right now is this gold line right here. It's the 100-week moving average at 492. That is the next target. If it hits that level and fails to break, then it could stall out after a multi-week run. If it closes above that level, that's going to be a signal, keep riding. This uptrend's intact. There's more upside potential, because right now this is what we call a longer-term swing trade. Anytime you have an uptrend on the daily or on the weekly chart, and the candles are riding above the middle Bollinger Band and above the 50-week moving average, and they're riding EMA4, the pink line support higher, the signal is that you can ride for a longer period of time. If that's your strategy, is not to day trade or short-term trading. If you're looking for longer-term plays, this is the kind of setup that you're looking for. Are the candles riding above support, breaking resistance? Now, if it tops out here at 492, if it fails to close above, that's where you'll know it's hitting resistance, and it might come back down and retest that 50-week moving average. It needs to hold that level. The close below the 50-week moving average, it would no longer be in play. It would be signaling downside risk. It has to stay above that level. This week's candle is busting through that upper Bollinger Band. Notice how the upper Bollinger Band is hooking up. It's signaling that it wants to push higher. There's no unfilled gap below. It's just all about breaking that 100-week moving average. Okay, let's look at UAVS. Closed up nearly 20% today. This used to be ENR. What was it? ENRJ was the old ticker symbol. You can see ENRGEX or JEX up here. And so this was, they changed their ticker symbol to UAVS. And so it's still been in play, but it hasn't had the same amount of focus with that ticker symbol change. What happens is people lose interest. They forget about the stock. But when you forget about it, that's when things start heating up. And so as you can see, RSI is back above 52. And so the last time it got above that 50 level, you can see that's when when it made that really nice push all the way up to 1250 from down here at 350. So it was a multi 100% bagger there back when it last time it got above 50. And you know, Fasto did get above 80 and it pulled back. That's due to the upper wick on today's candle. Notice the crossover on ADX. You know, the green line crossed over the black line and the red line, and it's pushing higher. That's a signal the bulls are taking control. If the black line ADX crosses over minus DI, the red line, that's going to be another signal that this chart is really heating up. The clue and the alert was put out last Friday that it was breaking that middle Bollinger Band, the dotted purple line. It was the first close above that level since back here in March. Okay, the last time it was bullish, and so that anytime that you have all the candles riding below the middle Bollinger Band on the daily chart, and then it finally closes above after, especially look at all this consolidation with volume down here, you know, that's your clue. You know, that's your signal. Okay, yeah, the stock's in play. And once again, that theory was proven correct with the gap up open and the nice run today. So if you were able to get the alert and load on Friday, you were rewarded nicely today. That provides you an opportunity if you're a short-term swing trader to flip on the move up. You know, yesterday, and then, you know, look to either reload lower or, you know, move on to the next play, that type of thing. And so basically now what it's all about is busting through this upper Bollinger Band. It's hitting that level at 327. You know, you can see it topped out at that level today. If it can get above, then you have the 50 and 100-day simple moving averages up here between 4 and 430. Below, the downside risk is there's an unfilled gap between high of day on Friday and low of day today. So the candles could come down here and test the EMA 4 at 250. They might even test the middle Bollinger Band support at 230. As long as those two levels hold, then this new uptrend is intact. It has to hold both levels. If it was to drop below 230, it would no longer be in play. As you can see, from 293 to 230, that is a big pullback. So yeah, that upper wick was a little bit of a red flag here with the big volume spike on today's candle. You know, they were obviously selling some shares in the rally, but as you can see back here, you know, they've been able to push higher with these similar types of patterns, and so we'll see if it can continue. Keep in mind that gap below will likely fill at some point in time. Take a look at MTP. Okay, this did close up 36% today. When I alerted it in the chat, it had super low volume, and so it was heating up, but there was like no volume. So it is nice to see that it closed with 576,000 shares traded. That was much better than how it started the day. So that shows money started flowing in as people caught on to this play heating up. RSI is at 62. Fasto's now above 20 after being oversold. And so as you can see, this was a thinly traded stock. You know, very low average day volume. It had what we call the attention spike back here in the first week of May. Look how much volume came in. It ran all the way up to 300 day simple moving average and pulled back. Looked like major dilution. Well, today that volume spike today and the push above resistance has put it back in play. At least, you know, if you didn't jump in, have it on your radar for tomorrow. If it breaks above the 100-day simple moving average at 96, then it should be able to push higher. What you're looking for is the top of this candle here. You're looking at 110 up here at the high close, just below 120, and then it's all about the 200-day simple moving average at 133. So those are the big levels above, you know, 110, 118, 133, 130. Those are the big levels to break above. It's all about that staying above 96 tomorrow. Above 96 signals upside potential. It stalled out before at this level, so you know, it could stall out again. This has been the tough level to break. It's failed multiple times. You know, is this time going to be the charm? We'll see. We'll see if it can push through. Keep an eye on it tomorrow. Okay, let's look at a couple of crypto stocks here, blockchain related stocks. Here's INPX, closed up 14% today. This thing's heating up. So yeah, keep an eye on it. It got above the middle Bollinger Band down here intraday, and then it happened to close above, so that's good. It stayed above 37. That's what needed to happen. It did form that upper wick after hitting the bottom of the gap level, and it failed to close above. And so notice how all these candles are failing to get above that bottom of the gap level. There's a gap between low of day on this candle and high of day on this candle. The upper wick on today's candle almost filled the gap, but it didn't quite. It hit like 45, I think, was the high. If it goes to 47, that would fill the gap. And so going forward for INPX, it's all about staying above the middle Bollinger Band. If it holds 37, it has more upside potential. Look for a gap fill. If it pushes through 47 and it fills the gap, that's when it could get going. You know, that's when it could heat up, and then you know, you have the the 61 level here around that close, and then it's about making a move all the way up to that 50-day simple moving average at 76. That's the upside potential on a gap fill, is that it could make a run all the way up to that 50-day simple moving average. If it drops below 37, if it fails to get above, it's in a sideways channel right now, and it's in the middle of the channel, and the top of the channel is the bottom of the gap, and so it could keep channeling sideways as well. Notice how tight the Bollinger Bands are. When you get super tight Bollinger Bands like this, the lower Bollinger Bands at 32, the upper Bollinger Bands at 41. When you get the really tight, look how wide they were before. I mean, they were off the page. You know what I mean? They were so wide, and now they've gotten super tight, and that happened because of the sideways channel. And that's like taking a bottle of champagne and you're shaking it up, and this is the cork. And once it pops, it's going to have more than likely an explosive move in one direction or the other. And so a break above 41 should signal that it's popping to the upside, and if it drops below 32, that's going to signal the break is to the downside. Okay, let's look at KODK. This is Eastman Kodak, closed up 12% today. Yeah, this is making a nice move. It has plus DI breaking out up here. You can see that breakout. You can see the black line crossed over the red line. The chart's really heating up. I wanted to show you this time frame so you could see this longer channel that it's been in. It's been in this long sideways channel, and so this is the top of the channel right here. And so today it closed finally above the top of this channel that's been happening since March. Basically for the last 3 months. And so that was super bullish. It had been channeling, holding this $5 zone for months here, and now it's finally breaking out above, and so that's your clue. This is heating up. It doesn't have the big volume. It only had 1.2 million shares, so we're going to see if volume can come in now, if you can get a volume spike. But it was the largest volume day in a while. I mean, even though it was still small volume, look how that volume bar down there is bigger than all the volume since back here in March. And so it's a clue. You have the volume spike, you have a P-star bull flip, and then it's hitting right at the key level. I mean, it looks like it closed just above, actually. So it did close above the 100 and 200-day simple moving averages at 584 and 588. So if it can stay above 588, that would be incredibly bullish, and that could be the signal that Kodak is ready to get moving higher. And what we'll be looking for is a retrace up to $7, which was the high close in February, and that 300-day simple moving average at 726 tested. I mean, who knows, if it's going to get moving, but this is the best it's looked in quite some time. There is this unfilled gap way up here at $9. So yeah, like I just said, when you get the tight Bollinger Bands and then it breaks out to the upside, many times you get an explosive move higher. These were some super tight Bollinger Bands right here. They got super tight, and they're starting to get wider as it's pushing to the upside, and that's exactly what the bulls want to see. Okay, let's look at BPMX. Closed up nearly 7% today. Yeah, people want to know about stocks that are heating up that haven't run yet. Well, this is one of them, 54.71, bullish crossover. This is heating up. It got just above that middle Bollinger Band, closed right at that level on Friday, and then today it closed above the 200-day simple moving average for the first time since back here in March. And so if it can stay above that level at 22 or 21.6, and then get above the 50-day simple moving average, that's the green line at 232, that's going to signal it wants to head higher. So keep an eye on it tomorrow for a break above the 23 resistance zone. If it can't stay above 22, that'll be a red flag, or 21.5. It has to stay above that level. But right now it looks like it could push through. It has a volume spike, so keep an eye on it. Above 23, it could get moving. The 300-day simple moving average, the last key, the big resistance level is up here at 32 cents. Notice that's where it ran to last time. It was able to bust above that 200-day simple moving average. So we'll see if it can get moving again. Okay, let's look at REXX. Closed up 36% today. This dropped down to the OTC. It got crushed. It doesn't have huge volume, 974 or whatever it was, 1,000 shares traded. But on Friday, check out that big volume that came in. Look at this long lower wick. A huge lower wick. I don't know if some of that was a fat finger or what, a fat finger type trade, but they were loading on Friday, and then today it bounced, and so this is what we call a dead cat bounce play, and the candles are working into the bands. EMA 4 in the lower Bollinger Band are coming down fast, but that's the next key resistance, and so is EMA 4 at 38. So we'll see if it can retrace its way back into that level. If you look at the 15-minute chart for REXX, you can see it got above the middle Bollinger Band here today, and then it got above the 50 simple moving average at 3, and then now it's hitting the key resistance from the 18th, from Friday. And so if we can get above this 25 level, 28 will be the next level, and then there's the 100 simple moving average at 37. Notice the 37 is lined up with the EMA4 here at 38. So that's the big level if it can get above 25 and 28. Okay, let's look at ONTX. All right, so this is one that totally hasn't started running yet. It's totally looking like a piece of junk. Okay, so this is for the somebody made a comment that I'm not giving them plays that haven't set up yet. So here you go. This is one to keep an eye on. It's totally crushed. This is the weekly chart. Look at it. The RSI is below 30 at 24. You have Fasto at 3. Look at this nasty chart. You know, a huge volume down here at the bottom. I don't know if this is getting ready to delist or what. I'm not saying this is a great play. I'm not saying this is a good company. This is one heck of an ugly chart. I'm just saying, look at all those red volume bars in a row. Look at all that red volume, and look how big the volume spikes are here down at the bottom. And then now you've got a doji forming this week. You've got a green volume bar. Keep in mind that this week's candle will change all through the week, and so it could very well close with the big red volume bar and close lower this week. What you want to see is a close above EMA4 at 40 cents for the week. If it was to close above that level, that would be very bullish. The last close above that level was back here in January. So there hasn't been a close above EMA4 on the weekly chart since January. And so take a look at the daily chart for the stock. You see it's below 30 on RSI. Fasto is heating up. It's up at 54 now. And so notice how minus DI has been coming down. So it's been channeling sideways down here. And it's got a tight sideways channel. You know, this is it's really tight. I'm going by the closes here. So this red candle's the low close, and this doji is the high close. And look at all the candles in the zone, and look at all the volume down here. And so, people, it looks like people are loading. It's holding the 35 level. If it can stay above 35, what you're looking for is a break above 38. 38's the big level to break. If it's trading above 38, that's going to be your clue that it's in play. And then if it closes above the middle Bollinger Band, it could get a new upturn going. Check out PSAR. The green dots were above the candles. Today they flipped below. It closed today above EMA's 4 and 8. Look at that close above EMA 8. It was the first close above EMA 8 since back here in April, the last time the chart was trying to heat up. All right, so a lot of signals. MACD already bull crossed on both time frames. That's a signal the chart's heating up. All right, so keep an eye on it, ONTX. And then one more to take a look at is LAC. This just caught my eye when I was flipping through my charts. And, I'll go through and look at old charts. And this is a lithium play, the non-ferrous metals sector here, material sector. It's up 22% today. Okay, this is this month. It's up 22% this month. This is a monthly chart, and so check out the move it's making this month. It pulled back for 5 months in a row, and it came down and it hit the middle Bollinger Band, currently at 515. As long as that level holds, this uptrend is intact. It started a new uptrend back here in 2016, so it's been in a multi-year uptrend. And so this was a big move off the middle Bollinger Band, and now this month it's getting back above EMA's 4, 8, and 13. If it stays above 618 for the end of the month, that would be super bullish, and this could work its way back up to the previous levels. If it holds support here and the uptrend's intact, in previous times that it's pulled back, it's been able to work back and make new highs. So we'll see if it can keep that pattern going. And if it were to drop below 515, that'd be a red flag, and then it could drop down to the 50 and 100-week moving averages. Check out the big volume. This is huge volume for this stock. Lithium has been really hot, and then it was really hot, I should say, in 2017. And then it really cooled down in 2018, and then now finally it's starting to reverse. So this is another another play to keep an eye on. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. I'll post the link below the video. Thanks for viewing. I appreciate it.